shipping companies are transforming rust buckets into gold mines in a modern-day alchemy that could fuel already rampant inflation for years to come. The disruption to world trade caused by pandemic lockdowns and a shortage of new cargo vessels has pushed freight rates for aging container ships to record highs. Cashing in on the boom, shipping firms are locking in long-term leases lasting 3 to 4 years, which means consumers could carry on paying the price for the surge in costs until hundreds of new ships on order come into service. Take the Synergy Oakland, a mid-sized vessel flagged in Cyprus that can carry more than 4,220-foot steel containers. Greek firm Euroseas bought it in 2019 for $10 million when it was already a decade old. As world trade spiraled into chaos last year, it raked in $21 million in just over 100 days at the highest daily freight rate in history for a ship of its size. It squeezed in one more short-term charter, earning around $10 million in the space of 2 months before going out on a 4-year lease for $61 million in May, a 6-fold return in itself on the purchase price 3 years ago. That was almost the perfect play in a rising market, Simeon Pariaros, chief administrative officer of the shipping firm, told Reuters. We've not seen something like that in the history of the container market. The world's container ship fleet continued to grow in terms of capacity during the pandemic, rising 2.9% in 2020 after increases of 4% in 2019 and 5.6% in 2018, according to Clarkson's Research, a shipping analytics firm. But the surge in demand for consumer goods during lockdowns, congestion at ports that tied up ships for longer than expected, and a slowdown in new shipbuilding, partly due to uncertainty about whether vessels would comply with new environmental rules, all contributed to the shipping crunch and record freight costs. A Reuters review of more than 30 private transactions completed over the last 6 months showed that ship owners are leasing vessels on long-term charters at record rates to capitalize on the once-in-a-generation bull market. In May, the cost of locking in container shipments soared a staggering 30.1%, a record monthly increase in long-term ocean freight rates, according to Zenita's Ocean Freight Index. U.S. President Joe Biden said on June 9 that Congress should crack down on the outrageous prices being charged by shipping companies that control the market. Some of the big shipping firms are using their profits to hoover up what cargo ships are left at sky-high prices, which will in turn help to underpin high freight rates and fuel inflation in the future.